Welcome to MarketSnap's daily market rundown. The Nasdaq just snapped a brutal losing streak with a 2% surge, but the real story is the massive rotation happening under the hood. Semiconductor stocks are on fire, while the Magnificent Seven is in correction territory. Let's unpack what that means for your portfolio. After a rough week that saw the S&P 500 drop nearly 2%, markets bounced back hard on Monday. The catalyst? A fragile but real de-escalation in U.S.-Iran tensions, with both sides agreeing to fresh talks in Qatar. That took the geopolitical fear premium off the table, at least for now. The Dow added 0.6%, the S&P 500 gained 1.2%, and the Nasdaq ripped 2.1% higher. The Russell 2000 was basically flat, which tells you this was a tech-driven bounce, not a broad-based rally. The VIX dropped 4% back below 18, signaling some relief. The S&P 500 closed at 7,440, still well off its 52-week high of 7,620, but recovering from last week's slide. The index is now up about 7.5% year-to-date, but the path forward is getting trickier. The Nasdaq hit 25,820, bouncing from that 5-session losing streak. But here's the key divergence. Semiconductor stocks are up over 80% this year, while the Magnificent Seven is struggling. That's a massive gap that can't persist forever. The big story today was the semiconductor equipment makers. Applied Materials surged nearly 11%, KLA jumped 12%, Lam Research gained 8.4%, and Corning popped almost 16%. Astera Labs led the pack with a 16% gain. Tesla also bounced 8.5%, riding the tech rebound. On the flip side, telecom stocks got hammered. Verizon dropped 5.2%, AT&T fell 4%, and T-Mobile lost 4.8% on reports that SpaceX might enter the mobile phone market. Honeywell slid 6.4%, and Target dropped 4.6%. Alphabet was the standout megacap, jumping nearly 5% on its Dow debut and adding $168 billion in market cap. Comcast popped 4.5% on its plan to spin off media assets, but Microsoft slipped 1.2%, and Oracle continued its slide, down 0.5%. Looking at the weekly picture, healthcare and defensive names are leading. IQVIA gained 14%, AbbVie jumped 13%, and Thermo Fisher added 11%. That's a clear rotation out of pure tech into more stable sectors. The biggest weekly losers tell a cautionary tale. Cerebras dropped 24%, CoreWeave fell 19%, and Oracle lost 18%. Qualcomm slid 15%. These are all AI-adjacent names that got overextended. Healthcare led sector performance this week with a 4.6% gain, followed by consumer defensive at 3.5% and real estate at 3.3%. Technology was actually the weakest of the gainers at just 0.6%. Energy was the only sector in the red this week, down 1.5%, as oil prices fell back to pre-Iran war levels. Basic materials also struggled, dropping 2.3%. This week is a holiday-shortened one with markets closed Friday for July 4th. The big event is Thursday's June jobs report. Kalshi traders are betting on a disappointing print, less than 60% chance we see over 100,000 jobs. We also have Fed Chair Kevin Warsh speaking at Sintra, and PIMCO says the Fed is on hold for the rest of the year. You can find exclusive earnings transcript summaries on MarketSnap. A few other notable stories. The Supreme Court ruled Trump can't fire Fed Governor Lisa Cook for now, which adds to the uncertainty around Fed independence. France passed a law targeting fast fashion retailers like Shein and Temu. And Strategy, formerly MicroStrategy, just flipped its playbook, approving a framework to sell Bitcoin to fund stock buybacks. That's a massive shift from the buy and hold forever strategy. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. The big question heading into the second half of 2026 is whether this rotation out of tech into value and healthcare has legs. Make sure to check out our SWOT analyses on the stocks we covered today, and we'll see you tomorrow for another market rundown.